Welcome to The Crypto Life. We're your hosts, Prince and Mike. It's Thursday, September 23rd, recording right around 9 p.m. Mike, how you doing, man?
I'm doing well. Pretty good Thursday. We got a lot to cover today, so I'm ready.
Yeah, we want to cover today, the theme, I guess, of today's episode is what is the future of crypto and what does it look like? And Mike, you found this amazing article by none other than Gavin Andresen, who's talking about a possible BTC future. Do you want to talk about who Gavin Andresen is?
I probably should have refreshed on this before the pod, but basically Gavin Andresen was the person who Satoshi turned kind of control of the project over to when Satoshi stepped away. So he ran the Bitcoin project for a while. And when was that, like 2012-ish, 2011?
2011, yeah. Yeah. So in 2011, I think the CIA started investigating Bitcoin, and I think Congress had asked, Satoshi to come in or something. And at that point, Satoshi was like, I don't want to do this. And Gavin kind of took the mantle and just was, decided to go in and kind of represent Bitcoin. And so he kind of took over as the lead developer of Bitcoin after Satoshi. So he's kind of a big deal in the Bitcoin community. He's probably as OG as you can get in Bitcoin. Anyway, he wrote this great blog post that you found called A Possible BTC Future. It's not too long, and I want to just read over it really quickly. He says, take this as a little piece of science fiction. The chances the future looks like this are small, but all of the possible futures, I think, this has a good chance of any of happening. All right, then he goes into it. Imagine it is the year 2061. The BTC price is $6 million US, equal to about $1 million 2021 because of inflation. Miners are being reported 0.00610351565 BTC per block, plus transaction fees of about 5 BTC for 4,000 or so transactions, or 7,500 per transaction. But most BTC transactions don't happen on the BTC network. Most BTC is locked up in a multi-signature outputs secured using multi-party computation and mirrored on another chain as wrapped tokens. People move their BTC either because they want faster transactions, lower fees, more privacy, or want to invest their BTC in decentralized financial stuff, or maybe all of the above. The transactions that do occur on the main BTC network are high value, mostly between super whale size holders, centralized exchanges, central banks, and other decentralized multi-party computation addresses that hold all the wrapped Bitcoins. These whales maintain the BTC network forever. They are the miners and the transaction creators. They don't care how high transaction fees go because they receive as many fees as they pay. In the year 2100, the whales noticed that the mining reward is basically zero, and there are fewer and fewer transactions happening on the slow, expensive, zero privacy BTC network. So they decide to simplify and save money by shutting it down. One by one, they shut down the bridges that move BTC between chains. Then they burn any BTC locked on the BTC chain by sending it to the 0x000 address to make sure nobody can ever spend it on the BTC network. Eventually, there are zero new BTC being produced on the BTC network and zero BTC circulating on the BTC network. There is nothing left to secure and the chain stops. But 20 or so million BTC live on, circulating on other blockchains, valuable because there are a limited number of them and because BTC was the first scarce digital asset. And that's kind of where the blog post ends, but it's kind of a little bit of a doom and gloom BTC future, no?
Yeah, I mean, I definitely took it as bearish. Obviously, Gavin is trying to paint it as somewhat bullish because he says there's a $6 million Bitcoin price, although his rate of inflation over the next 40 years seems a little low. I don't think $6 million US in 2061 will be equal to 1 million of today's dollars. But yeah, it definitely sounds bearish, and it kind of addresses the point that a lot of the Sound Money Ethereum folks have been making, where Bitcoin is going to have a hard time being the most secure network just because of the declining block reward subsidy, right? Mm-hmm. So, and there's no solution to that unless you see a future where people are using Bitcoin as some type of global settlement layer. or that there's a migration to proof of stake, right? Like it seems like there has to be kind of probably both of those for Bitcoin security to work longer term. And Gavin's kind of recognizing that. And he's saying that Bitcoin will always have value because of the 21 million scarcity meme, but it's more of a collectible rather than this kind of sound money asset. What were your thoughts?
Yeah, like, this is something that we talk about a lot. Like BTC the Asset is different than BTC the Network. BTC the Asset will always kind of retain value because, there's only 21 million of them. It was kind of the first, but, BTC the Network might not. And this is, if BTC is going to migrate, Justin Drake thinks all of the BTC is going to be settled and moved on the Ethereum network. Because think about it, Ethereum is probably the next most decentralized chain after Bitcoin. And it's got already the most wrapped Bitcoins already on the chain. So, I think right now there's over 200,000 actual BTC that have moved on to Ethereum already. By the year 2060, it's not too far-fetched to believe that, maybe we have 10 to 15 million BTC moved over to the Ethereum network. Because again, Ethereum is where you still have decentralization, you have privacy, but now you can also earn yield on your Bitcoin. You can, and then, and in order to move those Bitcoins, but you're just paying, fees to the Ethereum network instead of the BTC network.
Right.
Yeah.
In my view, it almost has to be Ethereum, right? Especially because the narratives going around today are saying that there's kind of like these marginal returns to decentralization and censorship resistance. So they're saying like this is a lot of people in the Solana camp are saying 1,000 nodes is good enough, right? As long as you can run 1,000 nodes, that's sufficiently decentralized. And the main thing we should be optimizing for is speed, right? And Ethereans have kind of like a different view. They say no, decentralization and censorship resistance matters a lot. And people just having the ability to kind of run a validator on their own local PC is extremely important, right? And Ethereum is the only network saying that, right? So I don't see any type of credible usurper, right, for this role other than Bitcoin, right? And if it's not going to be Bitcoin, it's got to be Ethereum.
Yeah, exactly. But it's just so crazy to see Gavin kind of paint this picture because you'd think someone who literally took over the project from the creator himself would be kind of a Bitcoin maximalist, someone who's, do or die Bitcoin, paints the rosiest picture of Bitcoin. But here he is kind of sounding the alarm like, guys, Bitcoin's economic, parameters or economic model isn't sustainable in the long run. And, it's more likely than not that Bitcoin kind of just lives on in a different chain. And I just think that's, it's kind of crazy. Like, and I think it's got to turn some heads in the Bitcoin maxi camps. I don't follow them that closely, but when you have someone like Gavin kind of paint this picture, it's like, okay, it does lend a lot of credibility to what the people in Ethereum have been saying for a long time. So
yeah, do you know what he's been up to? There's like a couple of things, right? Like I don't know what he's been up to. Is he still in crypto at all, or does he focus on it? Does he contribute to any projects or?
I haven't heard from him a lot. I think he's like a pretty private person. I remember like a few years ago, he did kind of say, oh, Ethereum is cool, but he doesn't make a lot of statements too often. So. Right.
No, and it's kind of funny because I wasn't around back then, right? Yeah. I wasn't in the space. I got in the space
and neither was
later. But from what I've read, right, like I've read books on it and blog posts, and it sounds like all the people back then really cared about like the tech and like all the cool things that you could build. And Bitcoin has kind of gone away from that. Like the maxi campus kind of taken over. And I think that's turned a lot of people off. And you've seen a lot of like those Bitcoin OG, maybe not Gavin, I don't know. He didn't migrate over to Ethereum. And some I've met who were in Bitcoin super early and they saw all the cool possibilities that Ethereum opened. Mm-hmm. And that aligned more with their kind of ideological views. And but yeah.
Yeah. And this is also why Justin Drake kind of says Ethereum fulfills Satoshi's vision of what, maybe he thought Bitcoin could be, because, his first commit, I think, to Bitcoin, or one of the first, was to try and build something on top of Bitcoin, like a marketplace or peer-to-peer thing. And I don't think it was actually ever fulfilled, but you can definitely build stuff on top of Ethereum. And, I think if Satoshi's still around, he'd probably be saying like, Ethereum's pretty cool. And that's maybe where the future is. Well, actually this reminds me, one thing that Ryan Selkis tweeted after Masari mainnet, he said that, one thing he's been thinking about is in the future, Satoshi is going to give away his Bitcoin Ready Player One style. And I wonder if if the metaverse happens on Ethereum, if all of Satoshi's Bitcoins, if that actually does play out, is it just going to happen on Ethereum as well?
Well, do you have a view on who Satoshi is or might be?
No, I don't. I definitely think he's alive. I think.
You think he's alive? Really?
Oh, absolutely. I mean, he posted back in 2014 on his website that he's not Dorian Nakamoto. I don't know if you remember the Dorian Nakamoto thing, but I think it was Newsweek had kind of found some random guy in California and said, this guy named Dorian Nakamoto is actually Satoshi Nakamoto. And so the media had a field day. Everyone was in front of this guy's house. And this guy was just like an old guy, like didn't seem like he was very tech savvy or even knew what Bitcoin was. And he basically said, no, I'm not Satoshi. And then the real Satoshi actually, because there was such a media frenzy around it, came out and said, I am not Dorian Nakamoto. And so this was the first time we'd heard from Satoshi since I want to say 2011. And so I think he's very much still around. He's just,
I've heard a lot of smart people seem to think that Hal Finney was Satoshi. And I just looked up the kind of, I am not Dorian Nakamoto. So Satoshi put that rebuttal out on March of 2014. Yep. And apparently Hal Finney passed away in August of 2014. So Hal Finney was still alive when that blog post went out. But it does seem like Hal Finney was kind of, right? Like Hal Finney was the first person Satoshi sent Bitcoins to, right? And he was kind of...
Yeah, I don't think it was Hal Finney. I don't know, but who knows? I really just think Satoshi is a real person. He's one guy, and he just chooses to be private and, pseudo-anonymous. So
it's pretty amazing. That's pretty amazing, right? If you're worth X billion dollars and you haven't touched a cent of it, you're just, it's like something out of a movie. It's crazy.
Yeah, I know. I do think he'll eventually reveal himself or people will figure it out. Maybe not now, but maybe 10, 20 years from now. But
that'd be crazy.
Yeah, it would be. That's one reason actually, I think if Satoshi does come back and he just has all his Bitcoin, does
coins start moving? There's a time that was in March or that was in 2020 when some coins from 2009 moved and people flipped out. The market dropped 5%.
Yeah. And I mean, he owns probably up to 1 million coins. So just imagine if he wanted to sell even a portion of that, what it could do to the market, considering the correlation and everything else. Ethereum thankfully just doesn't have that kind of centralized ETH ownership. So
yeah, Vitalik, people like to point out, to say that Vitalik's the dictator of Ethereum and he owns most of the network, but he owns, I think it's definitely less than 1% of total circulation.
It's 0.3% or something.
Right.
Yeah. It's not a lot. But we're talking about the future here. So what is the future outside of, okay, if that's what's going to happen.
It's a good segue. I like the segue.
If that's what's going to happen to Bitcoin in, 50 years, what is going to happen? What's the rest of the crypto world look like?
Yeah. Do you want to start? We were kind of talking about this week, the multi-chain future. A lot of really smart people seem to be talking about a multi-chain world.
Mm-hmm. Yeah.
I think that there's some incentives at play there that cause them to kind of voice that. But you start.
Yeah. So, if you listen to the smartest people in the space, the biggest investors, the guys who have the most skin in the game, they will kind of say that, we are headed towards a multi-chain future. And what does that look like? That means multiple L1s, meaning Solana, Avalanche, multiple side chains, kind of like a Polygon, multiple layer 2s, like an Arbitrum or an Optimism. And all of these things are just going to exist in like a multi-chain world, and projects are going to exist in these different ecosystems. And these guys have like, access to the best information, and you can kind of see it like with developers too. Like developers want to build on things that are fast. They want to build on, places where they don't have to pay thousands of dollars to deploy a smart contract. The counter to that is, yes, these will all exist, but how important is decentralization and security going to be? And, what role does Ethereum play if in this multi-chain future? And, my thought is all of these L1s and side chains and L2s are all just going to eventually be secured by Ethereum. There's going to be bridges to Ethereum with all of these networks. And, if anyone needs security for their assets on these other chains or anything else, they're just going to be able to migrate quickly to Ethereum. And Ethereum is just going to be that dominant base settlement layer for all of these different ecosystems. What do you think?
I agree there, particularly the point on Ethereum being the kind of global settlement layer for all of these chains. What I disagree on is you'll see a lot of people propose like there will be an L1 chain for DeFi that specializes in DeFi. Some people are pegging Solana as that because you have, right, SBF is building Serum on it, and it's going to be like a liquid order book, and high frequency trading is going to be on that. And then you'll have like another platform for gaming in the metaverse, and then another platform for NFTs. And they kind of talk about like this proliferation of L1s. And I think that's not correct. I think that's correct in the near term, but I don't think that's correct in the long term. I agree, like you said, I think everything will be essentially an L2 on Ethereum, where they focus on executing transactions as fast as possible with the highest transactions per second, and then leverage Ethereum's security and data availability for settlement. So that's longer term, but Ethereum's not ready to do that right now. So that kind of creates this opportunity for L1s to do that right now without Ethereum security. And they'll say things like decentralization isn't that important and stuff like that. That's where I kind of disagree. And I think that there's some misaligned incentives at play here, right? Because all these VCs in the space are incentivized. If they just say, hey, ETH's going to be the best performing asset for the next 10 years, over the next 10 years, ETH will be the best performing asset, which I believe, obviously there'll be a bunch of kind of outliers, small coins that go from like $1 million market cap to $1 billion market cap, right? And ETH won't outperform that. But ETH is probably the best risk reward right now. A VC can't go to their LPs and say that, hey, I personally think Ethereum's should be 80% of your portfolio or 50% of your portfolio. They'll paint a world where, hey, it's super complex. There's all these L1s. Ethereum probably isn't going to make it, right? Like you could have Solana's going to be like the next big chain, or Avalanche or whatever. And give me your money and let me collect 2% management fees and 20% incentive fees. And I will kind of steward that capital. And I have the smartest people in the world researching these day and night, and we will find the best investments for you. And that's kind of their pitch. And they're incentivized to do that and paint the story of this multi-chain world where there's a bunch of L1s and they're all kind of connected together. But in reality, longer term, and that world kind of looks feasible right now because, like we said, Ethereum isn't ready for that scale right now. But in the next 5 to 10 years, Ethereum will be ready for that scale, and everything's going to be an L2 on Ethereum. And there will be winners and losers and valuable tokens. I think some people aren't being true in the vision of the future that they're laying out.
That's such a good point. I just think, like, personally in my life, like, I've had so many people who don't understand cryptocurrency or this crypto world. And they always say, like, Prince, why don't I just give you some money and you can just help me navigate the space? I think VCs are kind of playing to that with a lot of people. And they're saying, like, I can see where this future is headed. It's going to be multiple L1s, but to their credit, playing devil's advocate, not saying that, everything that they're doing is just to make money. The returns on these other L1s have been really good. Their ecosystems have been developing. There are other projects launching on them. Just how well all of them proliferate and do well is kind of still yet to be seen. It's still very early. One thing that you said with these blockchains that are just focused on one project specifically, like, you can already see how difficult it is for these chains to do well. I'm like reminded of Flow, Have you ever heard of Flow?
Yeah, the Top Shot NFT one.
Yeah, exactly. That one had kind of like one fun killer app, which was Top Shots, NBA Top Shots. And then, now there's like no volume on it whatsoever. And all of the NFT volume kind of moved to Ethereum. And then back in like February and March, people were thinking, oh, okay, like Flow is kind of the place to go for NFTs. And then before you knew it, like all of the NFT volume was on Ethereum. It's really hard to kind of make a chain based on like one kind of like, we're going to optimize for social media, or we're going to optimize for music or files or whatever, or DeFi. One thing that Ethereum has is the composability of all of these different applications that you can use. And other chains just don't have that. And you don't get that by just having, a blockchain that's focused on one thing either.
Right.
Anything else you want to say on this, or should we move on?
No, I think we covered it. I will say, to those VCs' credit, there is a need for kind of scale right now in block space right now. And they're serving, these L1s are kind of serving that demand. So it is necessary, and it is providing a service, and they are innovating in the space, right? And like they're pushing the space forward, and I commend that. Where the only aspect I take issue with is when people are saying, oh, this Cardano or whatever is going to kill. They paint these things as like ETH killers and say, oh, you don't really need decentralization. High TBS matters the most. And they paint this false narrative on the world to kind of just pump their own bags. That's where I kind of take an issue. But yeah.
No, it's a great point. So what do you think the future of crypto regulation looks like? We've today and yesterday and this whole last week, we're hearing Gary Gensler kind of do a little bit of a roadshow, talking with the Washington Post, speaking in front of Congress. And, the question I think he gets asked the most is, what are you going to do about crypto? And there's kind of like two camps of it, at least I see in Congress. There's the camp that's, crypto is very innovative. We don't want these jobs to leave. We should have a lighter regulatory touch on crypto. And then there's the camp like Elizabeth Warren, and she's like, crypto is not really helping. It's not any better than the existing financial system. And, we should definitely regulate it because a lot of consumers are getting scammed and people need protection. And it's funny, it's like, I think most people in the crypto space will probably say that crypto regulation or regulatory clarity is needed, for regulators to talk with them. But right now it's kind of a black box in terms of what's going on at these agencies and what kind of rules they're going to come out with. I don't think there's anyone in the crypto space, any institution or otherwise, that's actually been engaged with the SEC or otherwise to talk about, what rules can we implement? What can't we implement? What should we implement? And it's funny, like, you hear Gary Gensler always say, yeah, if you're a player in the space, come talk to us. Let us help you. Well, Coinbase did that with their Lend product, and they got served a Wells notice. Like, if you launch this, we're going to sue you. So there's what Gary says in front of the public, and then there's what's actually going on and in the background. And I have a feeling we're going to know what's going on in the background really soon, considering just how hot all these regulatory comments are getting.
No, I totally agree. I'm kind of shocked at how aggressive Gary Gensler has been and like uncrypto friendly he's been. I think a lot of people had high expectations when he came into office. Yeah, and on those two camps, I'm probably kind of somewhere in between, right? We do need some regulation. There's like a lot of scams out there to protect consumers, and regulation would provide a lot of clarity for the entrepreneurs in the space and institutions looking to get involved, right? And kind of just create a framework that they can and allow them to play by the rules and know that they're not running the risk of legal liability for stuff. And then, yeah, you need some regulation, but at the same time, there's so many innovative things going on in the space, and rebuilding the entire financial system from scratch, basically, is what's happening right now. And you have people like Elizabeth Warren, and I've seen a few videos and I just kind of roll my eyes, and it's kind of ridiculous because she clearly doesn't understand the technology at all. Like, she just misuses terms. She doesn't understand what gas is. She doesn't understand how smart contracts work. stuff like that. And then she'll just condemn it as like shadowy super coders, like hacking and stealing people's money, and which just shows like a total lack of knowledge about the space, right? So the risk is if you have people like that come in and squash all innovation, and then you have the global financial system being built outside the US, right? So that's a risk that policymakers run. And it's just a line they have to balance. And it's, hopefully we have some more clarity, but yeah, I'm not too worried just because there's so many powerful people in the space on the side of crypto, right? With massive voices, massive pocketbooks who are going to kind of defend the industry. And we have like billion-dollar companies now, and there's thousands of people who have jobs in crypto, right? And now you can't, and it's becoming politically unpalatable to kind of regulate it away. So I think we're about on the point. It's just a matter of let's just get our shit together and find a framework that makes sense.
Yeah. One thing you said that reminded me, I was surprised because people said Gary Gensler kind of knows blockchain, but when he was talking to Elizabeth Warren last week and she was asking, these gas fees are not allowing people to sell their crypto in a market crash, and Elizabeth Warren asked Gary Gensler, why didn't the decentralized exchange allow them to do this? He goes, it's like based on whatever user agreement the user signed when they signed up for the platform. And it's like, oh my gosh, there is no user agreement when you're using really Uniswap.
No, it's ridiculous.
It's crazy.
He taught a blockchain course at MIT. He's got to be an expert in the space and totally understand it and know all the ins and outs. And it's like, oh my gosh, I'm going to reveal a little bit about myself here. I am just so skeptical of academia. I think there's a lot of kind of nonsense that goes around that in that space where you're kind of, I don't know, like the whole, I'm not going to get into it too much, but basically, so I dropped out of my MBA program at Columbia after my first year, just because I wasn't let me put it this way, they're just teaching outdated stuff, and their whole purpose is to kind of get published in these journals. And it's just like one giant circle jerk. You might have to edit that out. But.
No, I love it. I totally resonate with your sentiment of higher education. Really, it's more of a credentialing system, like where you can get into versus like what you actually learn. The quality of education is just in all these institutions has gone down a lot, so.
And they're charging $60,000 a year. And it's kind of crazy that people aren't allowed to invest in crypto or invest in a Coinbase lending product to earn 7% on their cash. But basically a minor, like a 17 or 18-year-old, is allowed to take out $250,000 of loans that are non-forgivable and go party for like 4 years. It's just insane. And it's just these interests. But let's keep it back at crypto. Let's not get political.
Yeah, it's funny. It's like, okay, so one thing I want to say is, Blockworks published this post about Gary Gensler, and they had this quote by Joel Edgerton. He said, the DeFi guys want the TradFi money, but they don't want the rules. It doesn't work like that. And I just want to take offense to that quote because it's not like, I would say I'm like a DeFi guy, but I don't want the TradFi money if it comes with all these heavy-handed rules. Like, I'd rather just it be a small space where, people with high risk tolerances are able to build and use products as they see fit. I don't care about TradFi money, like I would rather keep the space open and permissionless than, have these institutions come in and kind of like Mark Cuban, I guess, almost. He's kind of an example. He got into some yield farm called Titan a while back and maybe lost a few $1 million. And the next day is crying like, why isn't there any regulation in this space? Like, the space doesn't need Mark Cuban to, cry foul every time they get hurt. Like, most guys are like, okay, we understand if you're getting, 10,000% APY on some of these projects and you get rugged or there's a hack, that you understood the risks you're taking, and it's not for everyone. So if TradFi money is coming with the regulators and the rules, like, just keep your money in TradFi vehicles, guys. Like, don't go into DeFi. It's not for where you should put grandma's money.
Yeah, there's a few things there too, right? I certainly think the lack of regulation makes the whole space anti-fragile in a way, right? Similar to kind of, I'm not super fresh on this analogy, so forgive me if I get anything wrong here. But basically, to prevent forest fires, you kind of light some smaller fires, right? To kind of burn and like kind of create less kindling for future fires so that the future fires aren't as big, right? And you can equate that to the financial system where you have kind of these massive losses, like, for example, the one Mark Cuban took, right? Like, I'm sure Mark Cuban learned his lesson there, right? And he won't be aping into another project like that, putting millions of dollars at risk. And kind of like the whole space, kind of everybody kind of learns their lesson like that on smaller amounts of money. And that way you don't kind of end up in these systems with massive guardrails where people are taking, right? Like kind of, you look at the banks, like, right? Like banks and everybody's like, oh, mortgage-backed securities are super safe and not risky and housing prices only go up. And then you have people with 100-to-1 leverage in that system, right? Just taking advantage of it. And the gains are all privatized and then the losses are all socialized, right? In that system. And is a terrible system, right? And that's kind of like what over-regulation can do to an extent.
Yeah, no, that's a really good point. Okay, well, moving on from regulation, but sticking to our theme of the future, do you believe in the flippening?
Like the ETH flippening Bitcoin? Do I think it's going to happen?
Yeah.
Yes, like in the next 12 months.
Yeah. Well,
what do you think?
Yeah, I didn't really believe it when I got into Ethereum, I think back in 2017, but now I totally believe in it full force. Like the flippening is going to happen. Ethereum, I think, is just growing more and more powerful every day, while Bitcoin's kind of stagnant. It was kind of funny, like Jack from Twitter just did the lightning payments thing where you could pay people with Bitcoin on Twitter. And that's like probably the most innovative thing to come out of Bitcoin land in years,
Yeah.
Twitter payments. So
I honestly didn't think it would happen until I didn't think it would happen until pretty recently. So what kind of convinced me that it is going to happen is watching EIP 1559 and kind of like the progress being made on the merge, right? So ETH is going to go deflationary. Supply is going to be reduced by 2% outstanding every single year. And then to see the explosion that we saw in NFTs over the summer, which was just amazing, right? So you have basically exponential, right? You buy NFTs in ETH, or the best ones, or like all the NFTs that matter are priced in ETH, right? So if you want to buy those, you have to buy ETH. So we're kind of seeing this confluence of factors where you're getting exponential demand and decreasing supply at the same exact time. And while 2% of total float decreasing may not sound like a lot, you have to look at total float. Most of those coins don't even move, right? So I think Raoul Pal did the calculation, and I think only 13% of the float is currently in circulation or like exchanging hands right now. So 2% would be like 10 to 20% of the total float is going to be burned next year, which is kind of crazy.
Yeah, no, that's a great point. And you also sent me this really good article that was shared by Zero Hedge. I guess it's, JP Morgan put out this piece. It was kind of a head turner title. The institutional investors are piling into Ethereum, leaving Bitcoin. And there are just some really good quotes in this piece. JPM says a blockchain platform like Ethereum could potentially become a large market for vendors of trusted information, like Amazon is for consumer goods today. They say, as cryptocurrency use in DeFi and NFTs becomes more widespread, Ether will build its own first mover advantage in applied crypto technology. We're seeing glimpses of that today with the sale of digital art and collectibles through the use of NFTs. But this is a tiny peek at its actual practical uses. For example, individuals can store and sell their medical data through Ethereum to pharma research companies. A digital profile on Ethereum could contain personal data, including asset ownership, medical history, and even IP rights. Ethereum also has the benefit of running on a decentralized global server base rather than a centralized one like Amazon or Microsoft, possibly providing a solution to concerns about shared personal data. When I read this, I was like, this isn't even something I really even thought Ethereum could do. Like it's just another.
Well, it's not really. I would
yeah.
not put my medical data, advise anybody put their medical data on Ethereum just because there's no privacy right now, but there will be privacy technology eventually, right? So this is kind of like another example of like JP Morgan. Like I don't have a ton of respect for JP Morgan's crypto research. Like they've been totally wrong in the past on Bitcoin, and like I don't agree with a lot of their crypto views. But I do think that this report is interesting because it kind of shows you how institutions are thinking, right? We could just use JP Morgan here as a proxy for large institutions that manage capital. And they're viewing ETH as kind of this productive asset rather than kind of like digital gold, right? And if you kind of compare it, the people who invest in productive assets, real estate, stocks, bonds, right? It's orders of magnitude larger than the gold market. Right. So that's where the real capital is at. And I think it's extremely bullish for Bitcoin and probably extremely bullish for Ethereum, probably bearish for Bitcoin, just because where is the new capital going to come from for Bitcoin, right? Like you have the gold bugs. And then once those are exhausted, if you're a new person in the space with no ties to Bitcoin, why would you buy Bitcoin right now if ETH is going to be more scarce, more secure, and you can do all this cool stuff with it and it's a productive asset, right? Like it's kind of a no-brainer, I personally think. And that's kind of why I'm so convinced on the Flippening.
Yeah, it's a great point. And one thing that you were saying earlier about how long people are holding it, they have this great chart in this report. Ether holdings are modestly shorter duration than Bitcoin. And you can see 47% of Ether holdings are held longer than 1 year. Like they haven't been moved in over a year. And only 3% of the supply is held for less than a week. The remaining 50% is held between 1 week and a year. So I think there's a lot of long-term bulls in Ethereum, just like with Bitcoin.
Yeah. And that kind of shows a lot of new entrants in the space as well, right?
Yeah. I'm also reminded of, there's that chart, like how many have just like less than one Bitcoin or less than one Ether. And that's just been rising exponentially. Like a lot of people who are buying and just have like a little less than one Ether in their address. That's also a really cool metric to see.
Yeah. And kind of on that point, like I would advise buying Ether while you can, obviously, because we're bulls, but like people may think, oh, Ether's only at $3,000. Like how high can it go? I'll always be able to own like a few Ether. If you just do the math on, if you could go to Ultrasound Money, ultrasound.money website right now. You're laughing. That's making me laugh.
No,
if you go to Ultrasound Money and you look at the cap right now, there's 119 million Ether will ever exist. If you look at the number of millionaires in the world, I kind of just love this stat. There's about 50 million millionaires in the world, which means that every millionaire in the world can at most own like 2.5 ETH, which is kind of crazy. Not to say that ETH is going to get to $1 million.
Yeah.
But I've seen Justin Drake put out that he thinks that if the burn rate keeps up at this pace, we could see a 59 million cap Ethereum supply, which would be basically one Ether per one millionaire in the world.
Yeah.
Just insane to think about.
One Ether per millionaire. Yeah. That is.
And there's so many people who own thousands of ETH, right?
Yeah. Yeah.
So it won't be that much.
Yeah.
Like it'll be less. It'll be like half an ETH or a quarter of an ETH per millionaire.
Billionaires of the future.
Yeah.
All right. What are we talking about here? Bitcoiners jumping on the Solana bandwagon.
Yeah. So there's this tweet I saw today. So Travis Kling, who used to be a portfolio manager at Point72, which is Stephen A. Cohen's hedge fund, the guy who the main character in Billions, the TV show, is based on. He's a famous hedge fund manager. Yep. So he was a portfolio long-short equity manager at Point72. And then he started his own crypto fund, but it's not really a crypto fund. It's a Bitcoin fund. And it's kind of like a tactical overlay on Bitcoin, right? So they basically try and buy Bitcoin at low and sell it high, right? And trade it that way, but they only invest in Bitcoin. That may have changed, but that's like kind of like the last I've heard. But he was basically saying that Bitcoin maxis want to see Solana succeed, right? So here, I'll just read his thread because it's not that long. So Bitcoin maxis have owned basically zero ETH, right? So that's like a great point from the start is they own zero ETH. So it makes sense that they're hostile towards it And they don't see Sol as a competitor to Bitcoin, right? Because Sol doesn't prioritize censorship resistance and decentralization. They kind of prioritize transaction throughput. So they kind of see it as not a threat to Bitcoin at all, whereas Ethereum's totally a threat to Bitcoin because of the ultrasound money aspect, right? So they're saying, oh, they're pushing Solana hard as kind of like, I saw Pomp recently, he put out an essay that said Solana will flip Ethereum, which is just ridiculous for all time. We don't have to get into that today, why that won't be the case.
Yikes.
But then he's saying like maxis are looking at ETH versus Sol and thinking, well, as long as it's not going to be all that decentralized, might as well have a smart contract platform that can actually handle enough throughput with cheap enough fees where it can't really scale instead of getting choked up like ETH. And I actually replied to this. I wrote, this is just a bad take. One, ETH is more decentralized than Bitcoin because anyone can run an Ethereum validator, but only a select few oligopolies can mine Bitcoin. And two, Solana won't scale longer term. The future of blockchain scalability will be rollups, which is what Ethereum's roadmap is geared towards and optimizing for.
Yeah.
So, but it's just interesting to see Bitcoiners who clearly they A, own zero ETH, and B, they view ETH as a massive threat to Bitcoin, jumping on like the Solana bandwagon and just saying, hey, like, buy this one, right?
Yeah, no, it's interesting to see. I don't know too many Bitcoiners these days, or like who's relevant and who's not. You know, the ones I do know, they're kind of still just like Bitcoin's the only one, and they probably haven't even noticed Solana for the most part. Yeah, like this take is just like very, very bad. And I wonder, like, there's a lot of people in the Bitcoin camp that are like, let's build DeFi on top of Bitcoin, you know, or Bitcoin is DeFi. You know, that's like an Anthony Pompliano statement, like Bitcoin is DeFi or the original.
Or Peter
DeFi.
McCormick,
Yeah,
who's on just so bad at the
yeah, and then so if you start having these guys like building stuff on top of Bitcoin, let's say if that ever happens, like
who's going to build it? All these guys are just podcasters and like Twitter influencers who just try and pump their bags and only care about the price go up. Nobody's an actual builder in Bitcoin. It's all there's a few
there's
like
Jack.
core devs,
that's
and then there's
it.
Jack. And then that's it. It's like Max Kaiser and like a bunch of people who don't build anything, just talk about it. All they talk about is like the price, and that's it. It's honestly like we had a good text in our group chat. What was it? It was like, wow, like Bitcoiners are really running out of stuff to talk about. There's some headline.
There was some headline today that was like Bitcoin might reach 100K because testosterone levels in winter are going to be at all-time highs. Something ridiculous like that. Like, okay, not because of like, you know, network utilization or what's being done around the Bitcoin network, but just testosterone levels. So,
and get into this because if any Bitcoin maxis even started listening to this pod, there's no way they made it this far. So I quote tweeted Travis Kling and I was like, honestly, this is probably bullish ETH because Bitcoin maxis are one of the best contra indicators out there. They're late to Bitcoin. All the early Bitcoiners saw the possibilities ETH unlocked and joined ETH. And now they're arriving at Sol just in time to get dumped on by the smart money.
10 out of 10 take. That's a good one.
Shit posting on Twitter, so I left my job at Common Stock, which is an awesome company, and I'm starting my own company built on Ethereum. But now I don't have a boss. I don't have to worry about like people like seeing my tweets. And now I'm just shit posting, telling people what I think.
It's awesome. You're a free man now. That's so funny. Awesome. Okay, cool. So we got one listener question. We could use more listener questions. So if you guys have any questions or comments, email us at thecryptolifepod@gmail.com. One question we got is, what are your takes on the recent sell-off? Mike, you want to start?
Yeah, I mean, I personally think it's super healthy. We were talking about it a couple of weeks ago and just saying things are so frothy. People are just aping into a bunch of stuff and they have no idea like what the token even does or what the security risks or what the long-term outlook is. And these things are reaching billion-dollar market caps and it's kind of crazy. And I think market pullback is healthy. It causes people to rethink things they own and reevaluate their theses and arrive at more sound conclusions and then gravitate towards real assets. So I think it's healthy. It happens in the stock market. It happens in all capital markets. What do you think?
Yeah, I totally think it's healthy. I think people are trying to say maybe it's from the regulatory FUD that's going on. I just think, prices moved up too quick and now they're kind of coming down a little bit. There's no real news that you could tie to any of the recent sell-off that's happening. One thing I do like about the sell events is you can kind of see what kind of repricing happens in the market. When everything is going up, it seems like, a lot of, like, for lack of a better term, shit coins go up a ton. But when prices are going down, you can kind of see those coins that are kind of bad or don't have the fundamentals that other coins do, they got to get hit really hard. And so these
and some don't even bounce back.
Right.
Right. Like, yeah.
And so these sell-offs really help to kind of, I don't know, put a little bit of fundamentals back in the market. Like, you see maybe one coin like ran up really hard against ETH, but in a down market, like, ETH kind of gains on it, and slowly, like, the real value accrues to, the coins with the best fundamentals. And so I think little corrections like that help a lot with just taking some speculation off the table and, giving value to the coins that, are just doing the most for the space.
Yeah. And to totally agree there. And to add to that, it's interesting to see ETH not, like a year ago today, right? ETH would sell off way harder than Bitcoin in a down market like this. And they're kind of about even. I haven't looked at the charts. I don't even really look at the price that closely, but like from what I've seen, it looks pretty even and almost like one for one, which is kind of crazy. People aren't viewing Bitcoin as that much of a safer asset, even though it's been around the longest and kind of has a lot of really great network effects. ETH's network effects and reputation are kind of catching up.
Yeah, and it also kind of shows, like, I do think institutional adoption of Ethereum is growing at a much faster rate than Bitcoin. So, what is this thing about Lido that you have?
Oh, Lido! I just saw an interesting thread from Elias Simos.
Do you want to explain what Lido is real fast?
Yeah. So Lido is a DAO that offers basically a staking service. It's a decentralized staking service. So they have a contract where you can send your ETH to, and what they'll give you back is a token called staked ETH. It's STETH. And what that staked ETH token is basically a claim on your staked Ether, and they will issue rewards with the validator rewards and pay you out. And it's a way for you to kind of stake your ETH without having to run a validator yourself or give it to a centralized custodian like Coinbase, right? It's a little more decentralized.
And you have liquidity, because you can take your staked ETH and you could sell it for real ETH, maybe at a small discount to what it's trading at, but you at least have access to kind of your ETH, because one of the downsides of ETH 2.0 is it's a one-way transaction. You kind of lock up your ETH if you do it yourself. If you stake it, there's no way of getting it out right now.
Yeah, exactly. That's a great point. So what Lido will do is they set up a pool with Curve, and they issue their governance token, Lido, LDO is the ticker, in exchange as kind of like a reward for providing liquidity. So for people to put their ETH in the pool and put their staked ETH in the pool, and it kind of creates a market so that people can withdraw their ETH or withdraw staked ETH at any time and deposit into it. And it creates that liquidity that you're talking about.
Yeah. So what's going on here in this tweet thread by Elias Simos?
Yeah. So really interesting point. There's an aspect here where people right now, if you convert your ETH to staked ETH, you just deposit in the contract and you get back the staked ETH, and every single staked ETH is the same and earns the same exact rewards. And the issue there is with Ethereum, there's this thing called the validator queue, which, right, like when you stake your ETH, you can't stake it immediately. You have to wait to be able to start running your validator and earning rewards. So what that does is it creates like a massive queue. So you can imagine, say, there's 50 people who have staked ETH, right? Let's just say Lido is staking 50 ETH and earning rewards on 50 ETH. Then people put in another 50 ETH, and that's sitting in the queue, and that's not earning any staked ETH. So if the 50 ETH was originally earning 6% from staking their Ethereum, now because it has to be distributed, instead of being distributed to 50 ETH, it's distributed to 100 ETH. So now all the staked ETH are earning 3%, right? So what it does is it kind of penalizes the people who deposited first and rewards the people who were late depositors, right? So what this tweet says is, it's easy to imagine that Lido would implement a flow that doesn't penalize old depositors in favor of new ones. And he was suggesting that if this happens, if Lido somehow created like a, I don't know exactly what this would look like, but if Lido created, right, you had staked ETH, which earns all the rewards from validators, and then kind of like a waitlist ETH, right, for that doesn't earn rewards until that ETH is validating the network. You could see staked ETH start trading at a premium to regular ETH, right? Just because it's earning rewards, and it's earning higher rewards than anybody could earn by just trying to set up a validator themselves. So that, I thought that was pretty interesting.
Yeah, it is interesting. And just looking at the queue right now, you can go to beaconchain.in, and there is no queue right now. So everyone who's staking with Lido doesn't have to wait any days to kind of be activated or so. I wonder if that helps the price of staked ETH to kind of start trading at a premium.
Yeah, I mean, it trades a slight discount, maybe like 30 basis points. Yeah, it'll at least reach parity at the merge when you can just withdraw right from the contract. But it'd be interesting if it started trading at a premium if you own the stake.
Yeah, no, interesting stuff. One thing about staking while we're talking about it is everyone who does kind of staking on ETH2, I think it's like over 70% of ETH2 validators use Prism as their main client to help to validate the ETH2 network. And, because Prism has such a majority share of the network, it makes the system a little less anti-fragile. And so if you are a staker and you're using Prism, you should try and switch to another system. And even I think Lido uses Prism, and maybe they should switch because that would help the network a lot. I think that would also result in the merge happening faster, because if there's like one bug with Prism, I mean, it could cause a lot of issues, as opposed to if, every client has like a 20 or 25% share of the network.
Yeah, I think the core devs, the core protocol devs have put in, there is an incentive with the Beacon chain, right? Where if you're validating, it penalizes you more if let's just say there's a mishap with your kind of client.
Prism client. Yeah.
Yeah. If your client is experiencing an error at the same time the rest of the network is experiencing an error, you'll be penalized harder than if you kind of just,
you're on like a minority client.
Yeah. If you're on a minority client and didn't have kind of a blackout at the same, solely on your own, right? So they're trying to incentivize that. So just a heads up.
No, that's a really good point too. Okay. You want to talk about what we're doing outside of crypto?
Mine's not too exciting. I had a wedding this past weekend in Virginia, which is great. I saw a bunch of college friends. And then like I said, I'm working on that startup with my brother. So I'm just coding kind of nonstop. I wake up at 7 and I write code until noon. I go to the gym for an hour, and then I'll write code until 10:30, 11 o'clock. And then I do it all over again. So that's been my week for the past week. But yeah, just working on the startup. What about you? Grinding. Yeah.
I wish I had something as cool as that, but no, I finished the SpaceX documentary that we talked about last week.
Oh, let's go. How was it?
Dude, it was so good. It was amazing. Like it was emotional. It was educational. It was inspiring. It was, I want to say just a great overall documentary. And the 5th and final episode's coming out on September 30th, but spoiler, they did go up successfully and they came down successfully.
You can't ruin it for everybody. We're going to have to edit this out. People are going to be pissed at you, Prince.
People heard it. People heard it on the news, I'm sure. So it was all over the news, but it was really good.
If it wasn't successful, everybody would have heard about it.
Yeah, exactly. And now I started rewatching Game of Thrones from season 1.
Oh, really?
Yeah, with my girlfriend, and we're just like shocked in the first episode.
Just subtly dropping in the girlfriend hint in there, huh?
Yeah, why not? First couple episodes, I forgot just like how young everyone looks.
Oh, really?
Yeah, because like everyone is like Amelia Clark's like 21, I think. And Bran just looks like he's like 10 years old. You watched Game of Thrones, right?
I did. I know that this is going to sound like blasphemous, but I watched like the first 5 seasons and then I kind of like just stopped.
Oh my God. Dude, like it was funny because I started when the 4th season dropped. And so I caught up with the 4th season. And then the last 3 seasons were just so good. I thought they got so good, like 5th, 6th, 7th were like so much better than the first 3 or 4.
Really? I read like the first 2 or 3 books and then I started watching it. And then I kind of just went through this phase where I just didn't watch TV. So I just stopped watching Game of Thrones. I watched it in like college.
No, you got to finish it, man. You got to finish the last 3 seasons. The last season, I mean, I don't know. I felt it was a little bit rushed and they could have drawn it out. But I also heard the directors had this gig with making Star Wars films that was going to pay them a lot of money. So maybe they just want to end it quickly. But
yeah, I heard a lot of people were pissed.
Yeah, but it was still good overall. And, you know, you got to watch it because it's just timeless. So
I'm going to start like doing like an hour of TV at night. Just like, I need more of like a wind down.
Yeah.
So yeah, maybe Game of Thrones, maybe the SpaceX documentary. I was thinking about doing like 1 or 2 Seinfeld episodes a night, just because that's on Netflix now, or I think it's going to be soon. I've seen like some shows, but I never watched the whole thing. So I'd kind of like to do that.
Yeah.
Are you a Seinfeld fan?
No, not really. I never got into Seinfeld. I saw a few episodes and was like, this is not my kind of humor, but I know some people just love Seinfeld and, you know, more power to them. I think this is good. We could probably wrap it up here. I haven't thought of any good way to close this podcast yet, but
you need your closing line.
I'm still working on it. You guys have any fun catchphrases we could use? Email us at thecryptolifepod@gmail.com, and we'll see you guys next week.
And we'll take one of those submissions. So whatever it is, we'll just take it, and then Prince has to sign off with it, no matter what. And whatever the best one is by the end of the week, we'll go with it for the rest of the pod.
Oh God.
And forever.
All right. This is it.